YouTube. You could be anywhere in this world, but you're right here with us. So thank you for joining us. I'm Chris. This is Dave. Thank you for joining us for another Money Making Monday. New series that me and Dave decided to go ahead and start, where we give you guys some ideas. Of course, it's not financial advice, but best thing we could do is give you an idea to work off of, and of course, we also do some educational stuff. So, you know, Dave, what's good, brother?
Not much, man. Just getting home from my busy day. I had quite the day, but I'm excited to just get this video out of the way. That way we have some type of idea to play with. As Chris just said, guys, we are starting a new series called Money Making Mondays, where we're basically going to be scanning for ideas. And if we come across something on this particular day, we'll go ahead and make a video and do an analysis breakdown. That way we have an idea to play with for the week and understand how we're going to play a specific currency pair or pairs. But right now, the pound CAD was the best possible opportunity that we could identify for the day. And it looks like something will be setting up probably by London Open, if anything, tomorrow or sometime during the week. It's not really when it presents itself. It's just if we have an idea that's on the balance of probabilities going to work out, we want to definitely go ahead and discuss it and dissect it. But anyways, welcome to today's video. This is Chris and David. David and Chris, at Traders here at Traders Creed. Good morning, good afternoon, good evening, wherever you are in our tiny blue planet. So, pound CAD 15-minute chart. We're just going to do a quick breakdown on this and discuss why we have a short bias and what we're going to be looking for in order to exploit a short opportunity to the downside and potentially make some money for the week. So first things first, deploy key levels 1.73, 1.72. We're just going to be breezing through this analysis because by this point, if you haven't been keeping up with our videos, you should already have at least a solid understanding of the principles and concepts that we're teaching you guys. And this should just be pretty straightforward. And anything that we do deploy on our charts you should understand the reason for it being there.
And if you don't, go back to our videos because we have so many things. Well, that was already stated. So,
yes, sir.
a lot of goodies back there.
71. All right. So, with that said, we got our minor level at the 1.72500. Let's dash that up. All right. Second thing, let's get that nice little trend line going. Let's go ahead and get the most recent swing points interacting with each other. Make sure those contact points are nice, clean, precise, and accurate. This is how you make your money, so take your time with the peeps. No rush. All right, next thing, zones. Get something like this going. I like this, man. This looks really good. There we are. Oof. Now we're cooking with some. Let's get that there.
It's a pretty chart, Dave.
What's up?
It's a pretty chart.
Looking cute once we slap the makeup on it. Yes, sir. All righty, guys. So we got our major and minor levels deployed. Round numbers, midpoints, 50s. Trend line indicating a possible direction of trend. Looks like the sentiment is bearish at the moment. We also might get some weakness for the pound in the coming weeks maybe. And now we look to map out our liquidity. Where are traders still profitable from prior sessions, prior days, weeks, months, etc.? So we start working through our filtering process. What gives us a good indication that maybe this is a pair that we want to exploit to the downside? Well, we have a specific checklist for that. We look for a break of structure, impulse move, nice little range, confirm that range with at least a minimum of 2 contact points at the high and at the low. We got one here, 1, 2, 3, 1, 2. It's confirmed. It's up. Now we're starting to get interested. You got a trap, no follow through in that range. Nice little stop punt. It's been a nice trigger to take short. Now, obviously, you can't play the shoulda, woulda, coulda game. Everything looks good in hindsight. We get that. But the reason you do hindsight analysis is to start giving you a better picture or narrative of what you should be doing. So once we get a break of structure, impulse move, confirmed range, stop hunt, and then another cycle down, that is a solid indication that we need to be looking for a short play. And then the same process repeats itself. Our edge is derived when the markets exhaust themselves, when they start to create a range, because in a range, we can engage in much more accurate order flow analysis. This is a little bit much more sophisticated type of analysis that isn't really taught in the industry because you're just being taught patterns, indicators, trading signals, entry triggers, the least important shit in this business. We specialize in order flow analysis, liquidity manipulation, i.e. stop hunting, all that shit, man, etc. The reason this is important is because this is how the markets are fundamentally driven. This is how the game is being played. You don't move the markets as a retail trader. The big guys do. Smart money hedge funds do. Big institutions do. Why? Because the biggest wallet wins in this business. They have to covertly maneuver themselves in the markets to get their orders deployed in a very strategic way. They can't have the market move or start alarming everybody in one way or another without getting their contracts deployed. So they have to be very strategic, and they create deceptive price action in order to get that manipulation cycle completed. It's a lot easier to understand this manipulation cycle when you have a range and you start to really work in through the dynamics, what we refer to as the meta games, of other traders, like how they're thinking, why they're transacting, what they're probably going to do, or if they've executed any trades, where they're placing their stop orders. All this stuff is very, very important in the form of your analysis. So now that we have this a bigger range compared to this one, it's all fractal in nature, man. It doesn't matter, and everything is dynamic in the market. So nothing looks precisely the same. As Cris liked to teach a lot of our guys when we're training them on our methodology, is that the context is always the same. The form is always going to be slightly different. Here, this range looks slightly different, but the context is still the same. So we have a confirmed range, 1, 2 tests at the highs, 1, 2 tests at the lows. Price pulled back. I mean, shit, if you even want a much more accurate read of this, you can just get this down here, because we want to be extremely dynamic and get the most recent action to work with here. Price pulled back to this level of resistance. Generally, level traders would start to eye this level and look for opportunities to get involved. So as price interacted with this level, once more, sold off, didn't really make it to the other end of the range. What is that indicating to us? It indicates that there's still liquidity in the form of sellers holding that short position. Price came back, sold off. Guess what? The common notion in the retail space is that the more times a level is tested, the stronger it is. That is true to a certain extent. But the problem is that's literally just bait. It's a trap. That's why we refer to it as a trap. So as price sold off once more, guess what's going on here? It's enticing more sellers to take the trade at this level of resistance. More stop orders are being placed. More liquidity is starting to build up around this high, which is going to be prime territory for these big institutions to get in at much more cheaper prices and continue with their manipulation cycle. So all of this is what we refer to as a giant trap, no follow through, because price didn't make it to the other end of the range, giving sellers the opportunity to exit for profit. So we can assess with a high degree of accuracy and confidence that they're still holding those positions to the downside, and their stop orders are pretty predictable. We also know that sellers from this prior stop hunt are still intact, assuming that they're probably for as long as they can to milk or extract pips from the markets as possible. So we also have this dynamic trend line. Traps are also dynamic in nature. So if it's interacting off this trend line, you got this accurate level of resistance. This is all just confluence, man. It's
Yeah.
adding weight to our bias. So given that, now we wait for the last thing on our checklist, the manipulation, the
And
setup. So
Dave, if you don't mind me adding something right before you get to the manipulation, we also like to say that the market's a share conscious. The more eyes we have eyeing that level, eyeing that trend line, whatever it is, the better for us, because like Dave said, the next step is the manipulation, and that's when we pull the trigger, because at that point we know that all those traders who were eyeing that level just got stopped out, because they just, whatever, their trade becomes readable. You're able to tell where their stop loss are placed. You also know, like, worst case scenario, um where their stop loss could be, because that little swing that Dave highlighted on the left, it could be also a possible point where price could be breached.
exactly, man.
Yeah.
And as we discussed in prior videos, major highs and lows are going to be constantly invalidated. It may not be today, tomorrow, next week, but at some point in time, wherever that bulk of liquidity is, it's going to be invalidated. And if you really study technical price charts, you'll know that the markets are fractal. The same things that you see on higher time compressions are the same things you'll see on lower time compressions. And what you'll notice is that there are trends within trends within trends. There are patterns within patterns within patterns. This is some inception shit right here, man. So that's a conversation for another day. Maybe we'll get into that in another video, but let's just keep things straight to the point. So what we're expecting moving forward is, if our fundamental bias is still intact, that we're expecting weakness for the pound. We still got to do a little bit more research on that as to why that could be a possibility, but the sentiment feels a little weak for this.
I'll let you know why, Dave. On the 28th, we have high impact news. We actually have three. We have the BOC monetary policy report, BOC rate statement, BOC press conference. So that's why.
There you go. So depending on the data, that might be a catalyst for our trade to work in our favor. Now, we never try to anticipate what the fuck is going to come out of this news flow. What Cris and I have learned as specialists and technical analysts is that fundamentals and technicals, they're just the same. They're like opposite sides of the same fucking coin, man. And we truly believe that the technicals are just aligning for the fundamentals, and the fundamentals will eventually align with the technicals. So I don't really care so much for the fundamentals. If you do, great. That's fantastic. We just focus on where the volatility is going to be. And if the data comes out bearish for the pound or the CAD or whatever, it will add weight to our trade idea. So any breaches outside of that range, mind you, whenever you transact, you always have to ask yourself, if I'm a buyer of the market, am I buying as low as possible to sell high? If I'm a seller, am I selling as high as possible to buy low? You're only going to be able to do that when you're getting trades, or you're executing trades at the extreme points of these ranges, where the bulk of liquidity is, where the order flow is at. So if we get a breach up there, failure, close back inside the range, phenomenal opportunity to take the trade. Also, mind you, this could be prime territory to nick out this prior stop hunt right here, where sellers are still profitable. So just be patient. If you want to wait for confirmation, I would wait till we get a bearish close right back inside the level. If you want to be aggressive with it to maximize the risk reward, if you take any trades outside this range, give your stop orders some room to breathe, man. Give it a couple ticks. Shit, if you want, I mean, let's play with the idea here. Let's say you execute a trade somewhere around here. This is just for kicks. If you want to be extremely conservative and give your trade some breathing room, I would highly suggest that you place it above the 1.7300 level. Take your first target at the midpoint of the range. You're getting a solid 1-to-1. We always target the midpoint and then the low of the range. If you get the low of the range, about a 1.65. So not bad, man. But if you can be patient enough to see, once that manipulation, that setup is complete, you'll be able to choke up your stop loss at the high point. Let's say you put, maybe it doesn't nick out that prior swing point up there. Now you take your target at the midpoint once again. You're getting a solid 1-to-3. Low of the range, your second target, about a 1.5.16. Everybody is looking at the same shit, all Cris and I are doing, we're asking ourselves is how can we get a bigger piece of that pie? And we've specialized in doing that. So a lot of our risk reward profiles are pretty aggressive, and we're able to do that because of the level of skill, expertise, and specialization that we have in our method. Mind you, this doesn't come overnight. This takes a lot of skill, practice, experience, trial and error, fucking up, losing money, making money. And you just constantly get better. You're in that perpetual mindset. To be a master of your craft, you always have to be a student. So I literally just bought a new fucking book today on markets and how to properly I'm always intrigued in sharpening my craft. You guys want to know why we make money? It's because Cris and I were always focused, man. Now I'm not saying you can't dick around and enjoy your life, but when it comes time to really engage in your craft, be sure you're taking it seriously, because guys like us, we're going to take your goddamn money, man. So anyways, with that said, that is just a pretty neat idea on the pound CAD. If you want to let your dick hang, like we always say, then you could look to take an extension below the 1.71. But at that point, you're trading murky waters. The essence, the power of our method is to eradicate as much of the stress, decision-making process as possible, the anxiety, to stick to what we're doing, and you will make money. Take your target at the midpoint of the range, because it's almost, will never say anything is 100% because nothing is 100% in the markets, but it's almost a given that price, if the idea is sound, it will make the midpoint and it will make the low of the range. Out of all the back tested trades that we've studied, it's like I said, it's almost a given. So with that said, guys, we hope that this analysis breakdown helped. It was just very quick, straight to the point. I really don't know what else we could cover. I mean, sure, we could get into more sophisticated elements of this, but really, you don't need that, because we've covered a lot of bits and pieces of our method in prior videos. So take your time with it, man. There's no rush. Keep sharpening your craft. We hope that the content that we're delivering and posting from here on out is going to be very insightful, helpful, and is going to enhance your trading performance and your edge, because at the end of the day, we want as many of you winning, man. We can't help all of you. Some of you are going to get it, some of you aren't, but those that are seriously committed to their craft, we hope that what we are sharing with you is powerful and is helping you grow as a trader. So also, if you want to be able to pick up our principles a lot quicker in a much more condensed period of time, and you want to get feedback, coaching, training sessions twice a week, actual pre-trades, the live trades, results, consider joining our Discord, man. It's only $50 a month. You won't regret your decision. Our retention rate is extremely high. We hardly lose anybody. If anybody leaves our Discord, it's because of a personal issue, mainly financial. I understand that these hard times, it might be a little difficult to expend $50 a month, but if you do have it and you want to invest in yourself and in your education, what better way to do it with traders that are experienced, have skin in the game, years of experience, and will guide you through their process, thinking methodologies, frameworks, and all the works in order to condense that time continuum that it's going to take for you guys to become professional traders and achieve whatever objectives that you want. If you don't, then hit that like button, subscribe button, notification bell button. If you could do us that favor, we'll still deliver amazing free content for you guys to actually still make money. And thank you so much for the love and support. If you peeps have any questions in regards to what we just talked about, leave a comment down below. We'll try to get back to you in a timely manner. And we love any feedback, good or bad. But you guys have been awesome lately, man. We've been getting nothing but positive feedback. We'll get a dickhead here and there, but that's just the nature of the game, man. We love all of you anyways, even our haters, man, because we still making money with that, you motherfuckers. So with that said, man, do you have anything to add to that, Cris?
Nothing much, brother. Love you.
I love you to hell and back, man. So love all of you. Thank you so much for spending this time with us. Trade safe, trade smart, trade well, but most importantly, have fun with this shit.